Good morning. I'm Pete Najarian. This is The Take on this Tuesday morning, and Monday did not disappoint. Continues to show us volatility. We saw a lot of volume. We saw a lot of velocity. We had a little bit of just about everything that we've had since we started the year, and it just continues. As a matter of fact, yesterday, just to put a little something around there, take a look at what was going on with the Dow itself, up 400 and some odd points, call it close to 450 points fairly early in the session, only to go all the way back to flat and actually down about 120 points into the negative territory, only to recover and finish day. And it just shows you how NASDAQ, a little bit different story. It actually hit new 52-week lows, also getting that accelerated move to the downside. So a bit of a disconnect between the two, no doubt, yesterday, and finished the day down 262 points or 2% to the downside for the NASDAQ. So a tale of two cities. And really, a lot of that had to do with what was really working yesterday, what wasn't. Financials actually turned out to have a pretty decent day, but there was also energy, not so good, down about close to 3% on the day. Then you look over at technology, and you look at pointing towards Apple, and you see a big name like Apple, and it's going to the downside. That certainly does seem to pull other names along with it. But the technology space down about 2%, semiconductors down 3% yesterday. So you can understand fully exactly what was going on and why the NASDAQ was getting pulled so hard to the downside. The volatility index, a fairly tight range, but closed near 32, just underneath that 32 level yesterday. The interesting part and why the financials were doing so well, you take a look at the 10-year, about 2.1. Now, we were talking about this for a while now, some of those moves, and it's been kind of two step forward, one step back, two steps forward, one step back. And that's kind of the direction that we have been seeing in the 10-year, because yes, it's had some pullbacks, but it seems like it tests the next high and the next high, whether it was 1.8 or 1.9 or 2. Now we are above that 2 level. So interesting to see how that's playing out. We had just under 40 million contracts trading yesterday as well. So a pretty decent volume day on a Monday after the weekend and everybody kind of getting back into things and so forth. 40 million contracts, not so bad. John actually highlighted something yesterday that was pretty interesting. And we talked about it last night on Fast Money as well, but the buying of the June 70 volatility index, the VIX June 70s, with the volatility index closer to 31, 32, call it, and those calls being bought. So first of all, it's not short-term like so many other things, going out there and 82,000 of those trading, also selling the downside put. So really kind of putting a lot of eggs in the basket. The volatility may stay up for a while, and we may get one of those big moves to the upside, call it a blow off top, whatever you want to call it, not necessarily going all the way to 70. Always remember this. If you get a pretty violent move, a lot of those options are going to move with that move, even when they are fairly far out of the money. So that's just part of how things work. And that's why we talk about discipline all the time and trying to have areas where you'd say, you know what, I'm going to trim some here, or I'm going to sell out here. Those are some of the things that we talk about all the time. That's part of the discipline that we try to, work with each and every day in the markets that all of us are trading in. Nielsen yesterday, a really good day. And a lot of that having to do with somebody very interested in purchasing that company. Moderna had a really outstanding day. That name, along with Pfizer, financials obviously having a really good day. What really stood out to me, however, was how much of the movement was Bank of America, Wells Fargo, you had some Visa, far better moves to the upside than a JP Morgan, for instance. So you're still seeing where JP Morgan, great company, great CEO, great everything, but that valuation that it had reached, even on this pullback, is a far higher price to book value than you're seeing in a Wells Fargo or a Bank of America. So just try to keep that in mind as well. And I think that's part of the reason. And I've said this and challenged people for a long time that tell me, no, I'd rather be in JP Morgan. All I can tell you is this: put JP Morgan on a chart, put Bank of America on that chart. I don't care what you want to look at 3 months, you want to look at year to date, you want to look at 6 months, you want to look at the last year, you'll see exactly what I'm talking about. And I think a lot of that has to do with the valuation levels when we look at price to book, not PE, the price to book value, which is oftentimes how we all look at these financials. A lot of pressure in other areas of the market. Casinos, take a look at something like Wynn, Las Vegas Sands. Certainly a lot of smack to the downside. The price of crude dropping. A pretty amazing move from 130 for crude and then getting all the way down to just over 100 yesterday. We're below those levels today. Just shows you how fast things are moving in the environment we're in. It's why you got to be quick, and it's why you've got to have a lot of discipline in this very crazy market that we are in right now. So Devon, that was getting absolutely slammed yesterday. Chinese names, for a variety of reasons, these Chinese names are absolutely getting hit to the downside and continue to get hit. JD, NetEase, those kind of names. Apple, I mentioned already, but I'll also throw in Google, got hit to the downside pretty good, along with Netflix and Amazon. Those big names, a lot of those names that are parts of the FANG are getting hit to the downside. Just keep that in mind. That was yesterday, however, a little bit different today. Now, Datadog and some of those other types of names that are in that PE space, the ARC, that's where you can see a lot of those types of names. Okta, you got Zscaler, you got Lucid, Nike, all these names were pushing to the downside yesterday. And oh, by the way, Tesla, which we always have talked about as the barometer, Tesla was down about 4% yesterday as well. Take a look over at the NASDAQ, down a couple of percent. It really has been staying in that sort of a range, with Tesla leading oftentimes as we are looking at that. So we wake up to Tuesday morning. We have a bit of a calm start to the day, very early, fairly calm start to the day. We start to get a lot of those numbers get released, it seems like, all at once. And before we know it, as we get closer to the opening, we're up 140 points on the Dow, 100 points on the NASDAQ. We open, we're 270 points on the Dow, still about 100 points on the NASDAQ. We had a very, very brief pullback where we actually saw the NASDAQ get cut in half. It was up about 50 points or so. And then you look over at the Dow, it was up about 170. Those have changed again. We've jumped right back up. Last I looked before I came on, and things changed rapidly. The Dow was up 300. Matter of fact, I looked over at the NASDAQ, it was up 200 points. So we really are seeing those same kind of crazy moves, a little bit of back and forth, but today, mostly forth, mostly going forward and in a big way. So a nice bounce off of yesterday and some of that selling that we had the NASDAQ. Commodities definitely under pressure, continue to be under pressure. I took a look at gold. It was trading at 19.25. Look at crude. It's 94, 95, 96, somewhere within that range. Nat gas getting hit to the downside. It was down about 2% early on. Volatility, it's still there. Even with the move that we are seeing in the markets, people call it the fear index all the time. I'm not so sure that's correct, but I will tell you this, 32, 31, high 31s, 32s is where we find ourselves with the volatility index. We'll see as the day rolls on if we see a little bit of a pullback in there, and maybe we will. Maybe we'll finally get somewhere underneath 30, close under 30 after this, fairly long, prolonged period of time where we've been above 30. 2% move every single day out of the S&P 500. So as we look today, what is really propelling us to the upside? Airline stocks, absolutely on fire. I'm looking at UAL, Delta, Southwest, all of them moving to the upside. Cruise ships as well. CCL, Norwegian Cruise Lines, Royal Cruise, all those looking very strong. Starbucks bouncing back. I'm looking at Ross Stores having a pretty good day. Semiconductors really reversing and having a nice push to the upside. They were up about 0.75% very early on the SMH. They were up 2% last I looked. So a nice positive move there. Technology was up almost 1%. Up nearly 1.5%. So that's really what's kind of pulling these markets, at least on the NASDAQ, to the upside. Got a little bit of a pullback from the financials. They started off very strong. They eased back, but other areas, consumer discretionary and staples, started to improve a little bit more, both up about 1% early on. I was looking at the discretionary side of things. That's up about 2%. Staples up about 1.5%. So we are seeing a little bit of improvement in those names, even with the financials kind of easing back. And who knows, the financials could be all over the place all day long. Weakness, there's weakness out there. We look at those oil names, Chevron under some pressure along with Exxon. Certainly, you look at the beta names, very much you're looking under pressure. All the names we talk about, and let's always remember, those beta names work on that beta to the upside and the downside. We've had a couple days in a row now, multiple days, where we have seen these beta names really getting smacked to the downside. Should be expected when we have those kind of moves in crude. We're going to watch those names move as well. Names like Valero and Halliburton, APA, Occidental, Marathon Oil, all those names getting hit pretty good. Take Two, another one of those names. Lulu getting hit to the downside. Lucid getting hit to the downside. So you get the idea. And those Chinese names, they have not stopped selling those names, Baidu and NetEase. Let's just jump right into our unusual. PDD, another Chinese name. Now, I look at this name trading 2370. It's interesting because they're buying puts, the 25 puts out in April, so buying a little bit of time going to April. But here's the interesting thing. They're not buying the out of the money puts. They're actually buying the in the money puts. These are the 25 strike, getting a lot more leverage if they're playing this for the downside, getting that leverage because it's going to move like the stock as opposed to right at the money or going out of the money where they're going to move a little bit differently. These will move very rapidly if this push to the downside continues. That's a big if. But if that happens, certainly they will move. 6,300 of those were bought for about $4. So this is not inexpensive, but it's definitely not a hedge either, in my opinion. So looking at that, it's pretty interesting. Chevron's the other one. We talk about oil. We've talked about this big move, 130 down to 94, 95. Look at Chevron. It has absolutely been getting hit as well, like those beta names, just getting smacked to the downside. Today, they're buying the March 155 puts. The interesting part about this trade is it's short term. It would be a far more interesting side of this if this was going out further in time, looking for a major move to the downside. They're just playing for a short-term move, another pullback from Chevron. 11,000 of the 155 puts in March. $1.50 up to a little bit more than $2 for these. Stock at the time was trading 156.75. I always like to reference where the stocks were at the time of these trades. That way you can kind of gauge what's really going on and what that trade looked like at the time of the trade. Folks, have a great day of trading. If you didn't understand some of the nuances of what's going on in the options world, there's a lot of different things that go into it. We have all those Greeks that's part of the pricing model. If you don't know about it, find out ways to get educated on it, whether it's with Market Rebellion or through the internet or whatever. You're going to want to be in this derivatives market. 40 million contracts again yesterday. That's actually low for the year. The average is closer to 42 million contracts a day. Really, really busy, really, really exciting. But you've got to have that knowledge if you want to have success. Have a great day at trading.